all the investors of Dilip Buildcon had certainly hit the expressway when it comes to wealth creation, because remember, the stock listed at the level of 240 rupees back in August 2016, and since then zoomed away to around 1250 rupee mark in May 18. But since then it seems to have hit a roadblock because the stock is down about 30% from the high point. Now, of course, the stock got added to the ASM list just earlier this month, and that was the reason the stock was seeing lower circuit of 5% in the initial days. But other than that as well, there have been a lot of speculations around this particular counter. Remember, after the results, there were some speculations that the company has some issues with the auditors, and the sudden resignation of the CFO also did nothing to really assuage the investors. Added to that, there were a lot of questions asked regarding the Shrem deal that the company had signed to sell off its BOT assets and the capability of Shrem Group as a whole to pay off the outstanding dues for the acquisition amount. Also, the analysts are questioning if the company has bitten more than they can chew, because remember, their order book has sizably grown, but there are constraints when it comes to the balance sheet as well as the management bandwidth as well. But what have the management done to really assuage all these concerns? Well, they have come up with a lot of clarifications. First up, they say that they're looking at the top line of around 10,000 crores in FY19, expecting an order inflow of 18 to 20,000 odd crores. They say that they see no compression when it comes to the margins or working capital, because as per them, the working capital days have come down to 96 versus 130 that they were earlier. Also, regarding the Shrem Group deal, they mentioned that they've already got around 600 crore rupees and they're expecting more inflows to happen as and when the deal progresses. On the auditor front, what they did is that they came out with a statement from the auditors itself suggesting that there is no clash or disharmony between the auditors as well as company, and that they're continuing as the auditors of the company. But the question is the street buying what the management is saying? Well, if you look at the brokerage calls, they are definitely buying, because I looked at the 19 brokerages, 14 out of 19 brokerages actually have a buy call on the stock. 4 of them have a hold rating, and it's only 1 that is actually giving you the advice to sell the counter. As far as the consensus target is concerned, that is around 1240, telling you that still there's an upside of around 40 to 50%. Nomura, HDFC Securities, Credit Suisse all came in favor of the company after the results. For example, Nomura said that the exaggerated down move that we saw in the stock after Q4 earnings was a bit exaggerated. They're not too concerned about the margin profile as well. HDFC Securities says that they have no concerns regarding management bandwidth, and also they believe that the company would not need any further equity or debt to maintain their working capital and carry out the projects. Credit Suisse also recently upgraded the stock just a couple of days ago. So clearly the brokerages are positive, but the key really lies in terms of the valuation and how it stacks against the peers, because that has been really the undoing for the mid-cap market. Now, if you look at the valuation chart that is up for you, it is actually the Dilip Buildcon stock that is available cheapest after the recent correction at 15 times FY19 earnings. Now, the likes of Sadbhav, PNC as well as KNR will give you a return, is trading at around 20-25 times the forward earnings, but their PAT and revenue growth has been the range of 10 to 20 times, 10 to 20%. Even if you look at the order book position, it is Dilip Buildcon that has the highest order book position, giving it a stronger revenue visibility. But that is what all the brokerages have to say. I think perhaps the street is a bit nervous regarding the auditor concerns that have been raised and the recent movements in stocks like Manpas and Vakrangi that we have seen. So perhaps the street would want to be a bit more sure-footed when it comes to a stock like that, but the brokerages are pretty sanguine on the stock.